Good morning, everyone. Welcome to Admiral Markets, a live webinar on this 24th of June. My name is Chris, and I welcome you all. I would like to quickly ask if the sound is appropriate and working, and we can kick off this webinar. We're going to take a look at strategy this time, focusing on one specific method of tackling Forex trading, whereas Tuesdays, there is a focus on analysis, using technicals. Yesterday we discussed, for instance, EMAs, moving averages, for finding support and resistance, finding reversal trades with the trend trades, space, and a lot more, I guess. So if you still have any questions about that, let me know. You can take a look today. But today, primarily, I want to take a look at time factor. We talked about it last week too. And I would like to continue with that particular topic to give more examples. But if you have any requests for a specific strategy, perhaps next time or even today, let me know and we can take a look. Alrighty. So first of all, this webinar is intended for a global audience. It may not be suitable for everyone. To find out more information about that, conditions, and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and other financial markets are considered high risk and may not be suitable for traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. All right, so today's focus, as I said, using time factor to basically identify analysis and setups. Alrighty. Webinars, no, that's the wrong one, excuse me. This is the right one, okay. The Forex calendar, this is all on the Admiral Markets website, by the way, where you can find information about analytics, and there you see the Forex calendar. German IFO business in an hour, and we have GDP in the New York session. And some green and yellow tagged events. Alrighty, Euro dollar weekly chart. Let's take a look at this from a long-term perspective at the moment. We know that the Euro dollar has been pushing up and upwards, but now it's not being able to break 115. 114.75 has been too much of a headache. We did have a couple of bullish candles, but this is already the fifth candle. So we do see some headache. We see a bit of a struggle with that upside continuation. And if this week doesn't close bullish, then I would personally, from a time factor and a price action point of view, be looking for bearish downside next week. At least I would say to 110, perhaps 108, and the next target roughly, I guess, 106. So this week could be an important factor for the intermediate potential. From a larger perspective, this is only the third month, so this downside is still fully in play. And eventually, I would expect the downside to continue and even break this bottom at 105, head towards parity, and fall below it perhaps within the next, let's say, 2 to 3 months after June is finished. Moving down to perhaps a bit more usable time frames like the daily. Yesterday, we talked about the euro downside pressure that was probably going to dominate the market, either euro weakness or pound strength. I was interested in trading, or a combination, the euro pound short. We can take a look at some of those ideas that were floating around for my own trading. Eventually, I took the euro yen, by the way, so we can take a look at that. Euro dollar I didn't trade. It did actually push a lot further below 112. 112 I thought would be a decent level to aim for. Actually went a lot further. It went to 111.30-ish and posted a pretty bearish candle here. So from a time factor point of view, this is bearish momentum now, pretty good bearish candle. So definitely not looking for longs from that point of view. And this is more of a short terrain. So any retracement up could be a good potential from a time factor point of view. Now, if we add other elements, because that's always quite useful to do, just to get some confidence, we do see that price is still above the support trend line and obviously below this resistance and perhaps even this resistance. So it's kind of in the middle of a triangle, therefore not maybe the most interesting position at this moment. We can take a look at what the current balance is, because it seems to be quite in balance at the moment. You can do that by going, if you have Supreme, that's Supreme Edition is, by the way, I think it was Caitlin who asked me, it is available for demo account holders for 30 days. You can try it out for free. And if you have a real account, it is for free. There are about 60 functions that go along with Supreme. Amongst others, is this this sentiment trader. A lot of cool stuff, so definitely recommend checking it out. Let's take a look. Let me change the symbol. It's about 48, so it's about 50-50 at the moment. So let's zoom in a bit lower. This is the momentum that we see here to the downside, and a bit of a bounce at the moment. 1, 2, 3, fourth candle bouncing. So definitely would not be looking for longs as long as there's no 5 to 6 candles not breaking this bottom. Then I might think about a rebound bounce to the upside, after which a short probably at resistance. As we know, the daily candle is a very big daily candle, probably not breaking this high, could be interesting. So from that point of view, a reversal up and a reversal down, something like that, staying within this range could be possible for this week on the euro dollar. Maybe even, I would say, even most likely. When looking at the choppiness and the corrective kind of patterns we're seeing, wouldn't surprise me at all. So from that point of view, maybe a long, but not until at least this candle, the next, and perhaps even the one after that, the 4-hour chart closes. Considering that this is only the 4th, in fact, I should be more interested in shorts. But there's one thing I don't like about shorts is the fact that there's not a lot of space, I think, at the moment. You can still take a look at that potential on hourly chart. Here you can see kind of a bear flag at the moment after an impulse to the downside. So from that point of view, there are two options most of the time with the bear flag. It's either trading off a fib, because a bear flag shouldn't retrace too deeply. Otherwise, it's not a bear flag anymore. In fact, if it retraces more than 50 fib, it's not a bear flag. Preferably stays within the margin of 38.2. So if I put a fib from this top to this bottom, from this swing high to this swing low, it's at the 23.6, which is typical. So as long as it doesn't exceed 38.2 fib, it's probably a correction. It could still be a correction. So one way of trading it are the fibs, ideally the 38.2, or a break of the flag. And the break of the flag obviously would be something like this, connecting these bottoms. As long as this breaks within the next 1.5 candles, 4-hour candles, then I don't see any harm in necessarily in trading this flag, I think. Now the target could be limited to the minus 272 at about 110.60. There's not a ton of space, but from an intraday perspective, enough to to attempt a short when using lower time frames, because the difference, the distance between this bear flag and this trend line is about 90-ish pips. And then something like this could occur. Probably when we do break this, we'll have divergence between these bottoms. Let me add a oscillator. Oh. Strong AO here. So if we break this, we'll see this, and probably divergence between the bottoms will break, but not the oscillator probably. So this is a bear flag because it's a slow correction to the upside after a down move. Bear flag is typical bearish. Whereas a bull flag would have an upside impulse and a slow move to the downside, typically bullish. So this is a bear flag because it has a bearish kind of expectation, but it's not a guarantee. Obviously, nothing is in forex trading. So from that perspective, let's take one more zoom down lower to the 15. Let me quickly count the hour bars here, 1 second. 16 hours. There's plenty of time that it corrected. That's more than enough for correction. It's typically, if it doesn't break within 5, if a low or high doesn't break within 5, then it will probably rest until 13, and then after 13, the chances of a continuation, potential continuation, are increasing. Now we've had 16. That's enough for potential continuation. So from that point of view, if we look at the lower time frames here, let's see, the moving averages are aligned, and if price breaks through this trend line, it will also be breaking below the 21 band again on the 50-minute chart, like we discussed yesterday, and it could fall to the L3, then probably to the L4. And this is a Camarilla pivot point indicator, just to get some confidence on that. So yeah, I think that's about it, I guess, from this point of view. I think most angles have been discussed as far as I can see. If you have questions, let me know. One thing maybe I want to add on the 4-hour chart, if we do add the moving averages, is that, look, it's back to the 144 EMA. Therefore, and it's kind of dropped below it, could certainly be a bounce or break spot. So it's kind of interesting how price will respond to this level. Will it bounce or break? It could easily be a bounce as well, because typically a 144 EMA roughly has the potential, has a decent likelihood of acting as a support. So that would not surprise me, but I would say time will tell sooner or later as this trading day develops. All right, if we want to take a look at the correlation of the euro dollar, and we can take a look at the pound dollar, you can see that if we want to take a look at the pound dollar, the correlation with the euro dollar is a medium positive correlation. You can click on basically on this field. By clicking on this field, you're looking at the euro dollar with the pound dollar, and it will show you what it means and what the correlation is. So basically it says at this moment there's a medium positive. That means positions in the same direction on these two will tend to have similar profits. All right, so basically trading euro and pound at the same time would not make much sense. That's what we can read from it. But still, obviously, it doesn't mean that we don't have to look at it. It's just that it doesn't make sense to trade them, to trade both of these. So I will have to make sense to choose one of these. Alrighty. Pound is getting already a pretty big bounce. Actually, for those that were looking at my wave analysis in the morning I was looking at a wave 4 ending somewhere here at around 157.50 and 157. Now I dipped to 157.07, kind of just missing the 61.8, kind of respecting the 50 and the 61.8 zone. Now making already a substantial bounce of about close to 100 pips in the meantime off of those Fibonacci levels. Considering the big momentum, the big trend, the big pound strength that we've seen so far, it didn't happen on Monday, it didn't happen on Tuesday, but it seems that it could be happening today. Part of that has to do with the fact that if we zoom out to higher time frames, as discussed yesterday already, we have a big, strong bullish weekly candle. And we said yesterday that it's going to be the 38.2 or a 50 fib that will provide probably the bounce. And it was the 50. I wouldn't expect a deeper retracement. You never know for sure, but the chances are slim, I would say. So we got the bounce at the 50 of the weekly candle. Big bullish momentum. I'm expecting follow through from now on to the upside. So I'm definitely in a bullish mode on the pound. The pound looks maybe more interesting to trade today. Now this was a bearish momentum, but was a decent chance of turning out to be a correction. And now we've had the third candle already not breaking this bottom. At this moment, if let's assume someone is not in this long already, based on the fibs, then what to do now? How does a trader get in? How do we get in now? Or how do I get in now potentially? Now it doesn't really make sense, I think. It would be better, I think, to wait for this 4-hour candle to close and probably wait for a bit of a retracement of this candle. Preferably the candle doesn't turn into a big wick. I mean, if this turns into something like a doji with a big wick on top, hold on with the longs. Wouldn't take the long at all. Right? That's point one. Point two, if it does close with a decent close near the high, I'm talking about probably anything within 30%, not more than a wick. So this candle at the moment has a size of about 65 pips. So I would not want to see more than more than 30 pips of wick, or preferably actually not more than 20. If it closes within 20 pips of the high at this current size, it's, I think, a good sign. And a retracement to about halfway with a stop loss probably below the candle low, in fact, should suffice in this case. Should be enough. And the target could in fact be quite aggressive and loose, and even aim for, if I really wanted to go for great R2R potential, could even aim for above 160 or 160.40 perhaps for a pretty good swing trade with a trail stop, trailing most of the 4-hour candles but not smaller ones. That would be a loose target. I think I like that though, because I think it has the potential to move up that high. If that is a bit, if you're looking at this trade idea and you might be thinking, oh, I would like to try that myself, but the target is too high, then a more conservative target could be 158.50, 159.10, which are these smaller fib targets. Most likely, price will, if it does close good, make a dip, bounce, kind of break above the band here. You see the moving averages? But once it breaks above it, it will probably make another dip and then bounce again. That's what I'm expecting. And then probably have the second break here will probably be a bit more momentum, even more momentum. because then it uses the moving averages here as support. Now the moving averages are still above it. So when it breaks above it, it will not probably have enough power to really go far away from it before it needs to hook back to it and bounce off of it to get that support. That's typical. So from my perspective, that would be one of the ideas. Let me take a look at this hourly chart. You can see here, yesterday pound dollar, I discussed it. If the fifth or sixth candle isn't bearish, I'm taking a short. It was quite an unfortunate circumstances in the sense that the fifth was bearish and the sixth was bullish. Unfortunately, it's difficult to go through all the scenarios that could unfold. One of them is a bit wacky kind of combination of fifth being bearish, sixth being bullish. Because of that combination, I closed for about 3 pips loss, I think, so it's hardly anything. So I consider that myself break even. But point is, the reason why I did it was bearish as expected fifth, but the sixth didn't follow through. So I exited. Now eventually it did push through, and it was actually the 10th candle, not the most typical candle to break through, but it's not 100% science. When the fifth or sixth doesn't break, typically it will wait till the 13th. In this case, it was the 10th, but sometimes I would say throughout a London session, especially specifically, that could happen because there's just more movement in London. So what I didn't want to do was trade it again to the upside unless it really showed some momentum. It didn't show that. In fact, probably because it didn't show that momentum to the upside and it just went sideways, we got one more push away from these 21 band, below the 144, and now we're seeing the bounce. All right, let me zoom in here. H5 target pretty far away. I don't think we'll get as deep as the H3. If we do, it'd still be good, but probably we'll retrace shallower. I think even a 5-minute chart could make sense. To look at this retrace back to the zero line. Pretty good AO reading here, very powerful, but I wouldn't be surprised if this will needs to retrace back. So we could see maybe, I think at the moment wait for the 4-hour chart. That's probably the most important. I would prefer that one. But another way would be to look for this 5-minute to go back to the zero line and look for a bounce. Alrighty. The target, when looking at the wave 5 target, it's 160.35. But that could not happen today because we're talking about a few hundred pips. So that might take a couple of days. If someone is looking to exit today, it might be better to exit at 158.50. Just maybe a bit below it, 158.46. About 70 pips probably, potential 70 to 80. 40 to 35-ish risk, I guess. 40-ish risk. Alrighty, dollar yen pushed through that trend line, but is having hesitation, and that's what I was a bit cautious of. I don't know if anyone noticed, but I was overemphasizing, at least I was trying to, the fact that a trail stop was important, not to get caught into a potential kind of, there it is, upside that gets false break and turns into a downside, especially because of this important 124.50-ish level. So from that point of view, it's kind of stalling and it's going nowhere. Anyone who took that advice, or not advice, but idea, is about break even now, I'd say. From a time factor point of view, this is the fourth candle. So it's the same like the euro dollar. Will it keep pushing or will it reverse back down? Will the dollar strengthen or weaken? At the moment it's showing strength, but it's at a spot where resistance is quite dominant or powerful. So I would personally not be looking for longs. If anyone is in the long, I would I would personally move the stop loss to break even or below this 4-hour candle, a few pips below it. And yeah, basically the same idea as the euro dollar. I like the euro dollar a bit more than the dollar yen. I would skip this dollar yen. The euro dollar looks a bit better for bounce up or breakdown. The pound dollar looks good for a pullback continuation. So I would skip this dollar yen. AUD USD. Well, not too excited about it. Just so choppy the last few days, and yesterday was a bullish pin. When we're testing this low, pure from a zigzag point of view, I wouldn't be surprised maybe to see that. Pure from a momentum here, perhaps we'll get a zigzag. But doesn't seem the best setup. I would skip it. Quick question on the pound dollar. 4-hour looks like it's an uptrend, whereas the 1-hour is a downtrend. How to determine the bias for the day is the question. It's a good question. And I personally determine it with help from the oscillator. The awesome oscillator is one thing that I think is an important clue. And that was showing a lot of strength here, I think, a decent strength at least. And now it's back to the zero line, which means the retracement could be finished. The moving averages are aligned. And there's a very good space here between those moving averages. And price accelerated a lot from the 21 band. There's perhaps slight divergence between these stops. But within these stops, there isn't. And therefore, I'm not all too worried about that. I would want to see one more divergence here. So I expect this top to be broken. Furthermore, price has gone back to the long-term moving average here, which is a bouncing spot. So, and prices are now again on the hourly even above those moving averages. Plus, if you look at lower lows and lower highs, it actually, the downtrend here, which was having lower lows and lower highs, actually price broke out of that downtrend when it broke above these fractals. So even on hourly, you can debate whether it's this is already a higher high. So looks like it's a swift or a change in gears. The target, yeah, ultimately the target could be even higher, indeed. Depending on how we fib it. I personally think that 161.50, I think it was. Let me check. Oh, it's about 162 is an important level because of the 61.8 fib. But if it breaks above it, it could even go to the 78.6 fib, 166. Kiwi, ultimately did push through. I mean, I knew that was possible yesterday. It was just that I didn't see a lot of potential there. I think it eventually, I mean, it moved about 35 pips, I guess, depending where you measure exactly. But I don't know where the price was exactly. It was about halfway here, let's say. So it moved to, let's say, about 40. And I knew that could happen, but the reward to risk was not that appealing to trade this one. And I was looking for a pullback. From a time factor point of view, this is the fourth candle. So if we see a couple of candles like trying to hit this, then two more candles not able to break through it and making a pullback, it could be kind of a retracement, a reversal kind of speculative long here to the upside, perhaps with the target of the long-term moving average. But that is a reversal trade, and still needs a lot more time to get that confirmed. Cat still looks choppy to me. I'm not that big fan of this one. Euro pound did continue lower. I was talking about yesterday, a pullback to the 61.8 fib. That unfortunately didn't happen. Let's see. I was looking for here or here. Neither happened, in fact. And then price, unfortunately, just continued, but then hit the 71 target that I had in mind. Went a bit below it. Now kind of going sideways. Now, I'm not too interested in at this moment, just from the point of view that there's support pretty close by. Not a big fan of the euro pound anyhow, so I'll skip this for the moment. Euro yen is a trade I did take myself. I took it upon, as I said, I will take it if the candle closes bearish. If the candle closes, actually I said if the candle closes near the low, which it definitely did, to be precise. It was about 5.5 pips off of the low, whereas the candle itself was about 61 pips, which is 5 out of 60, is about 8.5%. So that's really a good close. As I said, anything below 20 is great. Below 5 is very powerful. Below 10 is great. Below 20 is good. I'm talking about percent, by the way. Below 30% is acceptable, but if it's more than, less than, if it's between 30 and 50, it's almost looking like something like this, and then it's not too convincing anymore. Or even worse is something like this. Or obviously even worse for anyone who wants to trade in that direction is a pin bar with a bearish close in this case. That's even worse. That's the worst probably. That is actually so bad that it might warrant the trade to the opposite side. Anyhow, this was a good close. I put the stop loss above the 4-hour candle because my idea was to trade the momentum. So from that point of view, I see no reason to put the stop loss all the way up here. For those that maybe joined last week's webinar on stop losses, this is what I mean with the balance between stop loss and TP and maybe time. I know that this stop loss is halfway a swing on a 4-hour chart, but that's okay because I'm purposely trading the 4-hour momentum here. I don't want to trade anything else. I don't want to live through a retracement. I want to go through a pullback on the 4-hour chart. That momentum candle's there and I want to capitalize on the momentum. If that 4-hour candle high gets broken, the whole idea is invalidated. That's where I want to exit. So that's where my stop loss was. And I would trail stop each 4-hour candle because I want to ride that momentum and nothing else. Now, the reason behind that trade, I think AB, you're asking how I took the trade? Yeah, when this candle closed, basically, this candle closed, and then the moment that one closed, there's a new candle here that's open but not closed, obviously, for the next 4 hours, and then I took it at that level when in this candle actually, right after this one closed. If that answers your question. So, and the idea behind it was the fact that here is a dip below the 21. We had failure to break above this top, and this is the double dip, the second dip below the 21 bad. And I therefore thought there's a chance to close this space between the 21 and the long-term moving average. That's why I had the target aiming at the long-term moving average and this bottom. Fortunately, I missed my target, I guess by, I don't know, 10 or so, maybe 15 pips. And I had to get out at a smaller profit than I was hoping for. I guess that I was aiming for about, I don't know, 90-ish. But I got out for, I don't know, maybe 30-ish or something like that. Now, if someone would have been able to follow my trail stop idea, it would have been more about 50, 60, if trail stopping the candle high. Depending, yeah, even this doji is acceptable, but depends. You could even put it a bit more spacious. Max probably 55, but more realistically, probably 40. Still not bad, almost a 1-to-1, but didn't get to the target, which is a pity. Alrighty. There was quite a lot of support at the close of that bar. Let's see. This bar? Or this one? This you mean? Well, I guess the thing is there is a fractal here, indeed. I guess one of the issues is always that in the sense that there will be always support and resistance. I mean, there are many layers of support and resistance. So many that it could almost become difficult to trade in a sense. I do get your point, indeed. But for me, the momentum, the other factors weighed up to be more important than the fact that there's a fractal there. So that's the answer basically. I agree with you that there is a level that you say, okay, there's a support level, but also this fractal has been broken, which is the nearest support. And the other factors I just mentioned, I thought it was the euro weakness in general, the failure here, the double dip, the momentum that was currently going on. Therefore, did expect to break through that level. Pound yen, I was only interested in upside because it's an uptrend, and we're getting that upside today. We didn't get it yesterday because we had a pound slower pound day. Today, the pound day is finally taking place, and we're getting that follow through because it was already an uptrend. So it was just pausing and kind of waiting for the pound to position itself for strength. That's happening now. So what we're getting now is the momentum or the move away from the moving averages. And we're getting a pretty good gap. You see the difference between price here, although this hour is not finished, but if it finishes somewhere here, pretty good gap between the candle low and the moving averages. Now compare that gap to this part, this part, this part, this part, no gaps. Price could not escape from the 21 EMAs. So this is now a different ballgame. I, like the pound dollar, would be expecting a pullback and continuation. Now, whether the pound yen or pound dollar is more interesting. I think depends a bit on the dollar yen and how that reacts, how the yen really behaves itself. Is it weaker or stronger than the dollar? Both have, I would say, a roughly equal potential for follow through to the upside. So maybe a similar story could be valid. 1 second. As the pound dollar. Same story indeed. Yeah, exactly, Beverly. Same as the pound dollar. It's a bit late to enter now. So I think a fib, if this 4 hour candle is strong, could be merited to do that as well. The same thing, or from here, but I don't know. Probably the 4 hour candle is better. Euro odd closed the gap. Actually, euro yen missed it by a bit. Euro odd did close it to the moving average. Same story, kind of the same kind of vibe of trades on all these euro pairs, and the lack of the pound trades, unfortunately, because of the pound weakness. Pound odd kind of correcting here, as it's probably the same story here. Pound New Zealand. Oh, wait 1 second. Pound New Zealand strong as well. A lot of New Zealand weakness. Retraced almost back to the zero line here on the oscillator. But no, I mean, there's not a good 4 hour candle as yet. I wouldn't rule out the upside here because it is a very good trend, but so far it doesn't have the same pace as the pound yen pound dollar. So at this moment, I probably prefer those two actually. I mean, I would still be cautious with New Zealand. It has been weak, but I'm a bit on the fence, a bit defensive because of the potential maybe to see a retracement on New Zealand eventually. And price action is not convincing as yet. Alrighty, let's see. Hmm. Kind of the same impression at the moment. Is there any particular pair that catches your eye at the moment? Ah, thank you, Brent. I forgot about that. Oh, Caitlin, I also see that you had a question, and Stella too. Sorry about that. I missed those. Let's see if I missed anything else. All right, so let's see. Caitlin was asking, is a higher high valid when the close is higher than the previous high, or there are exceptions, and a higher wick can be a higher high. When I'm looking at candles, when I'm looking at momentum, I consider the wick. So let me go to the pound dollar. We had a good trend there. So anytime it posts, when we have like momentum like this, and here, the candle high is for me important. When I'm looking at tops and bottoms, then I like to take a look at the candle close too. For instance, here's a top, and here we did not have really a candle close above it. Only here, that is something that I would like to see. Now, that being said, though, a top or bottom is really broken officially when price moved more than 15 pips through it. So technically, if it breaks more than 50 pips, it's actually broken when looking at tops and bottoms. So this actually was definitely broken. So if it breaks by a lot of pips like this, in this case it's about 40, then probably the close is not so relevant. If it's by a small margin, maybe less than 30, between 15 and 30, or between 0 and 30, then maybe the close is interesting to keep an eye on. I do personally look at the close as one of the factors when looking at tops and bottoms, but if I look at the momentum, I only look at the wick. Let's see. Stella is asking, do you think Euro might turn its trend to touch 115 or even 118 before deepening to parity maybe? Yeah, I think it will get up to 117, which is the 38.2 fib of the entire downside. What I mean is this. Or not the entire downside, but from here. So I'm expecting price to get up to that 38.2 fib. But the thing is that it could actually, it's a decent chance, but it's not 100% chance. I don't know, maybe 70% chance, I would say. There's always a 30% chance it could just continue like that, and this was all the correction we had. For the moment, though, even if it dips to challenge this bottom here at 108, I think there's a decent chance it will do something like this before moving down, indeed. All right, now finally to the EuroCAD. Björn, do you mean this line here? Like this spot of resistance, perhaps? Got it. Interesting. I would be cautious with it because to me the area of support is probably more of a zone than 138 specifically. Here we have a bottom, we have 144 EMA coming in there, plus we have some tops too, so I wouldn't consider the entire support zone broken as yet. I can see your point that 138 is an important level, but because it's still stalled at 137.50, it still bounced off of that level and didn't break through that. I would say still maybe caution is needed. From probably the same like the euro dollar. Either it bounces for a rebound to test maybe the resistance again, or a break below this bottom for a further downside. So let me see how I would trade it. Let's put some fibs on this. Not too sure. There's no divergence, or is there? There's not divergence, barely not. Probably, I would like to see a decent swift downside like this, and then look for a pullback. Same like the euro dollar, probably. I would really want to see that momentum come into the market, break through this bottom, make a 5-minute pullback, and then look for an intraday short down to yeah, 137. There's not a lot of space here. It seems very tight to me. I don't know. Chances of this happening seem very small because if it breaks this bottom, it already hits the target. And I wouldn't want to trade it now because it's still, in my opinion, in the support zone. So somehow it doesn't appeal to me because of those factors. Yeah. I think for the moment, indeed, skipping it. Yes. So maybe we can take a look at that same thing though from a time factor point of view. Yeah, it's the long is a rebound is too early because it's only the third candle. But if it's 5 to 6 not breaking this bottom, it could be just like the euro dollar. But it's actually only the third. I think the euro dollar is the fourth candle. Okay, so time factor. Basically, counting the number of candles not breaking tops or bottoms, and trying to judge the likelihood of a break, continuation, or a retracement when counting candles. So in the sense that if, for instance, here at this top, 1, 2, 3, 4, 5, 6 candles bullish. Okay, that's not a good example. Because of the fact that, well, okay, this is the seventh that gets rejected, but there's no profit potential left anymore. Let me see if I can find another example. Basically looking for momentum to finish if it doesn't break within 5 to 6. So perhaps here, let me see, we have downside, and then 1, 2, 3, 4, 5, 6, 7 candle not breaking this bottom, and you got a rally after that to the upside. Now, sometimes if it doesn't break within 5 to 6, it's just a correction. In this case, 1, 2, 3, 4, 5, 6. So it's just a small correction for continuation. That could happen. It could either be a correction or a reversal kind of idea. And I start to count as soon as one candle doesn't break the low or the high. So in this case, where was it? This candle is the lowest. The next one is not lower, so that's 1, 2, 3, 4, 5, 6, 7, 8. So as soon as it doesn't break, that's the first one. Now, as soon as this doesn't break, this first candle doesn't mean anything as yet. the second nighter, third nighter, the fourth nighter, the fifth already curious if it's bearish, the sixth curious if it's bearish, and if it's not, the likelihood of this downside being over is is increasing a lot. That's kind of the whole idea about what I call time factor, just counting the candles. Other time elements, often referred to as Gann angles. It's different than trend lines because trend lines we connect the points we want to connect, the points that make sense to us. That could be at any angle, any shape, any way we want to, basically. Although I personally use kind of rules for that too, but it's something we have to do. Gang angles is something fixed. It's considered also kind of a time factor thing. Not sure if I'm placing it correctly, but anyhow, the angle is fixed, so it gives you an idea about the kind of the angle of price action. If the angle of price action is too shallow, it's probably more corrective. If the angle of the line is steep and price is still above it, it's strong momentum. It shows actually, the weakness or strength of a momentum slash correction. All right, let me go back to pound yen. Still finishing, waiting for that finish here too. By the way, this mini terminal here, if one does have access to it, which is a very cool tool, part of Supreme Edition. The cool thing is you can trade directly off of it, and you can put in the lots right away, very quickly, buy, sell, and also change. Sorry about that. Change the new order here. A lot of cool things. Makes trading a lot quicker. Actually, a lot of traders are using this Supreme Edition. Unfortunately, not everyone is aware of it. That's why I want to address it this week so that you have an idea about it, what it is, what advantages you have, because it's quite a useful tool. It gives a lot more advantages than the standard MT4. So take a look. It's MT4 Supreme, right? And it has a high value for those that use it. Actually, 90% of the traders that trade with Admiral Markets would recommend Admiral Markets to a friend. So I would definitely say take a look and see if this is something for you. I think it's very handy. Any other questions on time factor? How's the trading going so far this week? Great, Beverly. Well, I definitely hope you do. It definitely worth it. Actually, you can keep an eye on. There's so many things actually that are available. You can even keep an eye on the average spread here. There's a spread indicator. You can keep an eye on what the average spread is on the euro dollar, pound dollar, sorry. Can I ask about news trading? Yeah, the euro dollar has a news event. The pound doesn't. The news event is, I think, let me check. 13 minutes from now, I don't know much about it, to be honest. 108 is apparently forecasted. No, I don't trade the news. Generally, I don't. I mean, I have sometimes in the past, but it's not hardly anything I do regularly. It depends what news event I expect. It depends what trade I have on the chart, how long it's been. It's not a very straightforward answer. What I do avoid are interest rate days, NFPs, and FOMCs. Those are what I avoid. Depending on other news events, I take it case by case. Pound news events, I generally always give a warning for, be careful because it can have a volatile impact. So I often like to wait for that one to finish, but not always. Depends. But NFP, FOMC, interest rate days, I avoid myself. Yeah, that makes sense, Beverly. Indeed, if it is good to take an occasional break, so that you know, personally, I don't like to trade on Friday just to. Um, Sometimes I do, but many times I don't. Fridays because market is not that great. We have NFP 1 out of 4 times anyhow. Um, so that's my day that I like to do evaluation, go through, learn something, back test. This is also good stuff. So I like to typically do that on Fridays. As far as I know, I think you just need a live account with Admiral Markets. That's it. So a live account, as far as I know, depends on the country you are residing. I think the minimum depends on which country you live in. It could be higher or lower for some countries. So I'm not sure what that level is. It shouldn't be all too high. Yeah, closing out trades is makes sense indeed. If a swing trade is open, then I would not necessarily either close it on Thursday evening, for instance, but um, yeah, Friday, then obviously Friday is okay. But new positions indeed is something that I don't do often. Um, Plus, yeah, I think that somehow, but I don't have this statistically, is that it seems to be less pleasant to trade. Let's see. For cable, you mentioned awesome 5 minute to zero. Yes, indeed, exactly. A 5 minute retrace. Let's take a look. Um, a 5 minute retrace. Let's see. Still needs a bit more. Also important is the four hour close. I think that still takes either at the top of the hour or maybe next hour. Let me see. This is 8 o'clock. No, our next hour. Sorry. All right, folks. Well, thank you so much. Next tonight, Nanette is going to take a look at do you have the right habits for trading. Tomorrow, we're going to take a look at practical tips for combating fear. And we'll try to make it more practical and less philosophical. So hope to see you in one of these webinars. I appreciate all the comments and questions. And always appreciate that. Yeah, that would be great, Beverly. I'm not sure if you need necessarily that amount, by the way. Could be lowered too, probably. Or is that that's your target for your live account? Okay, I understand. Cool. Very nice. So wish everyone good trading and see y'all soon. Cheers.